Hello, hello, everyone. We are here. This is Power in Numbers Live for June 2025. I'm really excited for this Power in Numbers Live. This is really where I can come and provide kind of more insights on what's going on financially that affects small business owners, what's going on economically that affects small business owners. So this is a little bit different than my typical recorded YouTube content. This is live. So we go through news, to-dos, and cues here. And we're going to start with news here in just a minute, and then we're going to go through some of the things that you should be doing right now as far as your business finances are concerned. And then I'm going to take some questions that were pre-submitted to this live. And you can submit those questions. There's a few different ways you can submit those questions. My team will put in the comments where you go to submit questions for the next Power Numbers Live. Typically, it's the last Wednesday of the month. I'm actually out of town next week. I'm speaking at a conference called Scaling New Heights. Excited about that. So we're doing this one a little bit early. So I'm ready, but I'm going down to Florida. I'm really ready for it. You can tell. So first of all, of course, I got to thank my sponsor, which this month is run powered by ADP. And that is the platform that I use for my payroll and also for my retirement plan, my 401k that I offer to my employees. It's all run through Run Powered by ADP. So just a couple of things about Run. I just want to thank them for sponsoring this month's Power in Numbers Live. They are really created with small business owners in mind. I actually, for a long time, didn't look into Run, the Run platform, largely because I thought ADP was such a big brand name that, you know, it's probably for big corporations. That's what I used when I was an employee at Coca-Cola. They used ADP, so obviously that's not meant for small business, but I was very wrong. They have a specific platform that is built for small businesses, and that's Run Powered by ADP. So definitely go check it out. It's reliable, easy to use payroll solution, everything that you would need for payroll, and it's really designed to support those unique needs of small business. So thank you, Run Platform, for your sponsorship. Okay, so let's jump into the news. We're going to talk about a few things, y'all. And again, here are a few places to submit your questions if you have them for next week's show or next month's show. So if you're watching me on YouTube, this is where you're going to go, just jamietrull.com/YouTube, and you can submit questions there. And then if you're watching me on Facebook, you're going to go through this link, jamietrull.com/newsletter, and submit your questions there. And speaking of Run, you can actually get 3 months free of Run Powered by ADP at jamietrull.com/ADP Run. All right, so let's jump on into it. Okay, we're going to talk. We talked last month, and if you haven't watched last month, it's still very relevant. So I would go watch that after this. I'm going to give some overview things. But if you want to kind of jump more into what's going on with this one big, beautiful bill, and I'm when I say that, that's literally the name of the bill, y'all. It's the one big, beautiful bill. That's the bill currently making its way through Congress. That is the bill that covers a lot of different things. It's a massive bill, as the name implies. And there are lots of feelings on this one, y'all. There are lots of feelings. So just, you know, I'm going to try my best to walk through it. You might think that public sentiment is very split based on, you know, partisan. So this is a Republican bill that, you know, it is very split. But what we're going to talk about here is that actually, you know, there's actually a lot of fracturing even among the Republican support for this. And it's happening more and more, which is why, to me, the odds of this actually, you know, getting passed by their July 4th deadline that they've set for themselves, I would be absolutely shocked. I would be shocked. So I will come back at my July episode if that actually happens. I don't know. I'll do something. I'll do a little dance on this video. If, in fact, this thing gets passed, I don't even think it's going to get through the Senate, much less, you know, the process now is the House passed their version of the bill last month. Okay, it is in the Senate now. It is being debated. And if and when something does pass the Senate, and here's some here's a, let's see, here's the one I want to put. Yeah, this one. If and when it does pass the Senate, it is going to have to go back to the House because there's been enough changes that they're going to have to send it back to the House. And it passed in the House by 1 vote, y'all. So it is not going to take a lot. And there are already people in the House saying if the Senate changes as they have them are what ends up getting passed in the Senate, they're not going to vote for it in the House. So it's a whole thing. And then it can go, to the president for signing. The idea of this getting done in the next, 2-ish weeks before the 4th of July, I would be absolutely shocked. Like I said, I'm gonna get back here and do a little dance if that actually happens, even though that might make it seem like a happy dance. It's just a dance. I'm gonna embarrass myself on this screen, not because I'm pro or against anything, but I would just be absolutely shocked. So come back next month and I'll give you the update and you'll see if I have to embarrass myself here. But there's a lot that has changed. So you can go and read a little bit about it, but real quick, I'm going to talk about public sentiment. So I'm going to put this up for you guys. And here's the article that I'm looking at just so that you can get a feel for what's happening. And this actually passed the House in the middle of the night. And it's like a huge, it's a very large bill that it's one of those situations where clearly, not a lot of people had read through all of the fine print of this thing. So there is just a lot that is in here. And what we're seeing now is more and more people understand kind of what's in it and are seeing it. Let's see, I'm gonna try to blow this up for you guys a little bit. Okay, can you see that? So essentially, this is a Pew Research poll that was done that basically said most people oppose it. So nearly half, 49% oppose it, while only 29% favor it, and another 21% aren't sure, which makes sense, right? Honestly, like the vast majority of Americans have probably not read this entire bill too. We're using, media to tell us kind of what is in there and to give us an example. I do recommend actually not reading the whole bill, but I actually put this into AI. So I uploaded into ChatGPT and started asking it questions. So that might be something that you could think about doing is if you're trying to parse through what's real versus what's propaganda versus, all of that, how this is going to affect you, upload it into AI and just start asking questions. Know that sometimes AI is wrong. So I noticed that it started giving me answers for a different bill first. But once I fixed that, it was able to kind of answer some questions and help explain things. And you can go in there and just say what provisions in here impact me as a small business owner or things like that. And it can really help you kind of get your head around what's actually in there. Now, if only our congressman would actually do something like that, that might be helpful. But anyway, most people are opposing it. And you can see here that, only 12% strongly favor this bill. So a lot of them are, about half expect it to increase the deficit. Now, what the Congressional Budget Office is saying is that it will increase the deficit. So the House version of this bill had about a $4 trillion increase in the debt ceiling. The new Senate version that they're working on right now has a $5 trillion increase in the debt ceiling. So that's the reason that some conservative Republicans are unhappy with it because, they want to be more fiscally conservative. And so therefore, a bill that is adding to the deficit is not what they are looking for. However, there are some that are upset because of the cuts that are in it, like cuts to Medicaid. So some people are unhappy with the cuts to Medicaid, which actually got even deeper in the Senate version. So there's a lot to be had here. There's a lot of discussion to be had. There is a lot of consternation on all sides of this. Again, I would be shocked if this actually kind of made its way through. Now, of course, you never know where, there's going to be pressure coming from various different sides on this. So we'll see where it lands at the end of the day. Now, if you're wondering what's in it, we talked again a little bit about that last time, but I'm going to put up some changes between the House version and the Senate version. And I'm specifically, again, there's about a million different things in here. I try to focus on the things that are most relevant to you as a small business owner that you want to be aware of. Right? There may be things in here that are going to personally impact you that you also want to be aware of. Again, use my tip to go put this into ChatGPT and start having a conversation about it. However, it is important to kind of get a decent idea of, this as a small business owner. So that's what I'm going to focus on here. So if we are, I'm going to zoom in here, the Journal of Accountancy, and we can put this in the chat too. Here it is. My team is amazing, and they're putting the links down here for you if you want to read through all of this, because I'm not going to go through all of it, but this is going to talk mainly about the tax provision changes, and there are a lot. So like I said this last time, but a lot of the tax changes that are going to happen with this are actually extending the tax cuts from 2018. There's a lot of talk about, what is and isn't. And I always ask, what are we comparing it to? About like whether it's going to increase your taxes or decrease your taxes. Well, that depends. Are we comparing it to what would happen if this bill didn't pass? Meaning a lot of those tax cuts are going to go away. Things like the qualified business income deduction that most small business owners get are going to go away. All that's going to happen if that does not get renewed and, extended. So, are we comparing it to what would happen, or are we comparing it to, today, what our situation is today for 2025, right? So it's a different answer as to whether this is going to increase or decrease taxes. So I always ask people like, hey, what are we comparing this to? Or when we say that, because are we comparing it to our situation today versus tomorrow, or what it would be if these tax provisions actually were to not get extended? So anywho, but anyway, so here's what you're going to see, when you come here. You're going to be able to get to the text of that bill again, and you're going to be able to, read some of it yourself. But there's a lot in here. There's a huge debate too. One of the big debates, let me see if I can find it in here, is this debate on the SALT cap. This is the state and local taxes cap. So what this means is deductions that you can take for your state and local taxes. This provision is most important if you live in a state that is has a high state tax situation. So if you're in California, New York, any of those states that have a high taxes, this impacts you. So the House bill, the current law caps that deduction that you can take for those state and local taxes to $10,000. However, in the Senate version of this bill, right, or actually in the House version of this bill, they increased that to $40,000. So that's a 4x increase from where it was. Now, the Senate version goes back to the $10,000 cap. And so that is one of the things that's really being discussed and is really being talked about. And there's a lot in here. This is just something to keep an eye on, especially if you're a higher income small business in a state that is a high tax state. Okay. It does have some things in here around the SALT cap. So it says it would provide that certain payments that substitute for specified taxes are also subject to the SALT cap, and it would require partnerships and S corporations, to treat specified taxes as separately stated items. So this actually could be negative. There could be some negative things for pass-through entities in here, but it's really that's going to impact more higher income small businesses that are in those high tax states. So there's a small amount of people where that could impact them if that stays in the bill. So that's just something to kind of be aware of. Let's see. There's some changes again. Here's what it was. The House bill included a provision that would have banned owners of SSTBs. That's some of you who are like accountants, lawyers, things like that. You're probably SSTBs, from claiming any deduction for essentially these SALT taxes. So this is where there's a lot of discussion happening right now on the state and local tax side of things. There's more in here. Again, I won't go into this, but there is some increases in the child tax. Yes. Yeah, so this would be probably important for you, to pay attention to as far as how this is gonna pan out, because this is a discussion, between the House and the Senate versions. I don't know where we're gonna land on this, so I would pay attention to this, Andy. Again, child tax credit's gonna probably go up in either version. QBI deduction is the one I'm really watching. This is the one I'm watching quite a bit. And you can see that like the QBI is one thing that would be going away. That's a 20% deduction that small businesses are getting on their taxes, and that if you're a pass-through entity, which is, I think, it has really helped a lot of small businesses from a tax perspective, and that is set to expire at the end of this year, right? So your taxes, if nothing happens, your taxes as a small business owner will likely go up if you've been using QBI, which most of you have, unless you've, again, way phased out of it, right? So that's something that I'm really watching. The House bill wanted to raise it from 20% to 23%. The Senate's keeping it back at 20. Honestly, I'm fine with them not even raising it. I would just like this to, I would personally like this to be made permanent, or some version of it that might be a little more simplified. QBI is kind of complicated, I'll be honest. But I would like something to be made permanent because it gives us more certainty as a business owner for reinvesting back into our business. I don't like this hemming hawing. Is it going away? Is it staying? Is it going up? Is it going down? Is it staying the same? I don't love that for planning. I mean, we're not that far out. And this is potentially a big tax change that could happen for small businesses. So this is the one that I'm really watching. There's a lot of, again, I won't go through all of these because they aren't specific to business, but there's a lot of things you can kind of look through in here. Here, we talked about this a little bit, no tax on tips and no tax on overtime. I actually like what the Senate has done. This is a little small, I know, for you. I'm going to try to blow it up a little bit more. But I actually like what the Senate has done, because what they did in the original was they didn't have a cap. So it was just no tax on tips, and that was it. There wasn't a lot of specificity. Now they're limiting this. They're putting, let's see, the deduction would be up to $25,000. So again, I could just, as a CPA, when I see no tax on tips, I just see a lot of room for manipulation, right? Is everybody just going to now switch to lowering prices, but then increasing tips or requiring tips, right? We're just going to get back into that tip culture because tips are more preferential as an income source if you're not getting taxed on them. So there's a lot of finagling. Now, you can't just start. They do have some rules written in here that I talked about last time around things like you can't all of a sudden just decide you're going to only take tips if you're not in a typical industry that is, like a hospitality industry, personal care, those types of things. If you're in some other industry and that's not customary for tips, then this isn't going to apply to you. So there's some rules, but they did limit it to $25,000. Which is a pretty high limit for most people that are tip-based. And then they're also phasing it out at certain levels of adjusted gross income. So I think that's a smart decision as well, so that we're not getting, the people who are making millions aren't getting a tax break that is really meant for those workers who rely on tips. Same thing over here on the no tax on overtime. They have capped it at $12,500 or $25,000, and they've put that same adjusted gross income cap on it, so that it is going to affect most of those people that really need it, which again I think is smart. This is a low cap. I wouldn't mind them going up to the 25,000 like they have up here for the no tax on tips, but we'll see. So again, this is just what's being discussed, but that's the main change that the Senate made to that. So you can go through and read through some more. There's more in here around, this gets really taxi jargony, but there's some positive things for deducting research and development, for being able to write off asset purchases all up front, those types of things that are potentially helpful. So even I like this one too, just it increases the employer provided childcare credit. I think that's great. I think that's a really cool thing to try to, encourage more employers to provide childcare for their workers. So there's a lot in here. You guys, again, yes. So Andy asked about the R&D. Yeah. So here's R&D. You can read a little bit more about it and what it's saying for R&D. But yes, it would be favorable for R&D, but there's a lot of ins and outs to it. So you can take a look at where it is. Now, I will say, one thing is just to overall, right? We look at these, we talk about them, we look at what's changing, but at the end of the day, this isn't passed yet. So we have no idea what's going to end up in the end. Now, I do think that the no tax on tips, because it's actually pretty bipartisan. So if a bill gets passed, that's probably going to be in it. And the no tax on overtime, I'm pretty confident in there being something in that as well. And even the R&D credit is pretty, the R&D provisions are pretty popular. So a lot of this, I think, will remain. I'm really curious about QBI. I think that is a big one. I'm really wanting to see where this lands at the end of the day, if and when a bill gets passed. So definitely, I would pay attention to what's going on, but don't over-index because, again, things can and will change between now and when something gets passed. So again, I'm going to use this time to talk a little bit because we just talked about changes with payroll, right? No tax on tips, no tax on overtime. Those are going to impact payroll. So I'm going to use this as a moment to just really quickly bring up our sponsor again, which is the Run platform, or Run powered by the ADP platform. And I think it's really important to work with a payroll provider when these changes happen so that they can help keep you abreast of the changes, make sure that you're meeting all the compliance rules and things like that. And that's something that the Run platform will absolutely do for you and help you manage these compliance changes. So they do a lot of things, but that is really important to stay up to date with these tax rules. Last year, we talked about some changes that were potentially coming through on things like worker classification and stuff like that. So again, really important to work with a payroll provider that you trust and that can free you up to really focus on your own business operations. Okay. All right. So that is the main talk about the One Big Beautiful Bill. And now I want to talk a little bit, just quickly touch on general economy and what is going on right now. I think this is good for small business owners to be aware of what's happening in the economy and to be able to kind of stay abreast of it because it does impact us, right? So we're talking about retail sales. Retail sales is absolutely a number that we should be watching as small businesses because it gives us a clue into how, consumers are reacting, right? Are people buying things? We're not. And that's going to, at the end of the day, impact us. So let me pull up, and my team will put the same link into the chat. This is our US retail sales, and this is on the Trading Economics site. So I love this site. There are so many different stats that you can track on here. So I highly recommend it. I'm on here all the time, just trying to get a vibe for what's going on. And I like the way that they actually give some summaries as well. So let's look at what we have. We have our May retail sales. So May retail sales, not looking too great as far as this chart goes. So we are down 0.9%, about 1%. You're down a little bit in April. We had a big month in March. We actually talked about this back in March. So does anybody remember, I'll tell you here in a minute, but does anybody remember why retail sales were up so much in March? And it actually has to do with why they're down in May as well. And it's a timing effect. I'll give you that clue while I take a sip of my coffee. I'll let you put it in the chat if you're watching this on replay too. And I'll come back. The answer is this was largely driven by an increase in auto sales that happened because of the concern about tariffs. So a lot of people, the auto industry went crazy in March because a lot of people were worried about these tariffs and how they might increase the cost of a car. So people that were thinking about buying a car this year, tons of them decided to do it all in March. Conversely, because so much of those auto sales were front loaded into earlier in the year, May is largely down, driven by auto sales. So it talks about it a little bit up here. Sales of motor vehicles, parts, dealers recorded a decline of 3.5%, followed by building material and garden supplies of 2.7% and gasoline stations of 2%. So you can see what that is. Now, if we take cars out of the equation, and this is why I like to dig deeper. Like you can see a number and be like, oh, that doesn't look good. But then you dig a little deeper and you're like, okay, there's a story to tell here and it may not be as bad as we might initially think. So if we go to retail sales excluding gas and auto sales, we are still down, but you notice it changes quite a bit, right? So now we're at just 8.1% down. It's not nearly as kind of alarming as it might otherwise see. Yeah, Andy, oh, he got it. I missed your response, but Andy gets the gold star. Yes, exactly correct. So that's why I just love really thinking about the context. Numbers can tell a story, but you want to gather a few pieces of data and compare them to each other in order to get the full story. So I'm still, kind of in a place of wait and see. I've said before, business owners do not love uncertainty. It's not great for business, right? We're kind of in this holding pattern, which isn't great economically either. So I would say kind of don't, while we're in a wait and see on both this bill and what's going to happen economically, I do see today is when the Fed is meeting about interest rates. I would be absolutely shocked if they cut interest rates today. It's like a 99.9% chance, I think last I looked, that they will not be cutting interest rates today, in large part because of things like this, right? And because inflation is still a little higher. They aim for 2% inflation. Last I saw it was about 2.4%. So we're still a little above where they want to be. And so cutting interest rates can have the impact of then, creating a more inflationary environment. So they're still keeping interest rates higher right now. There is a increased chance right now that they do cut rates by September, but that's always changing and it's going to be dependent on the economic situation of the time. I think one thing that's going to impact some of this is going to be what's going on overseas. And that's specifically going to impact economically from a oil and gas perspective. So I think that's the big fear is in oil and gas because of the importance that the region plays in transportation and things like that. The Strait of Hormuz, I think, is what it's called. Hopefully I'm pronouncing that correctly, but that's a big strait that Iran could potentially, if this gets escalated, could block access, and that would really hurt global demand or global supply for oil. So that could factor in, and I'm looking to see. This is kind of me putting this out there, and then I'll come back in July and August and see, we can look at what's going on with oil and see if it is following that pattern. But remember, when oil goes up, not just gas prices go up, but so do your transportation costs, right? So if you are, that's going to increase and cause some inflation with, pretty much everything that you buy because it's going to cost more to get it to the stores. So that's just something that I'm watching and curious what's going to happen. So, overall though, make decisions that are best for your business. We don't want to be in a wait and see mode forever. People did that with COVID. And, we could, if we were waiting for absolute certainty to make decisions on things like hiring or investing back into our business and stuff like that, then we would be waiting forever because we're never going to have full certainty. Things are going to be changing all the time. This is no exception to that. So make the best decisions for your business and also make sure you're building up reserves, right? Make sure you're building up those reserves such that you have, some flexibility to pull back when and if you need to. Okay, so that's the news section of today. That was fun. I love talking about this stuff and getting a little bit nerdy on the economy. All right, let's go to the next section. Okay, we're on to to-dos. So the biggest to-dos, again, I just kind of touched on it, right? I don't want everyone to be sitting around and waiting. Pay attention to what's going on with these bills. That's going to be important, but don't get overly, invested and start planning with any of these specific provisions in mind, right? Once we have more specifics, that's when you want to meet with your accountant because your accountant right now isn't going to know. They might be following this loosely, but they probably are of the persuasion that I'll deal with it when something's passed and then we'll figure out how it impacts you, right? So I would wait, see what gets passed, and then it'll be a good time to kind of sit down and think about how it impacts your specific situation and what you need to be aware of, okay? So have some general awareness right now. Know that when something gets passed, give your accountant a little bit of time to kind of, get up to date on it. Or come back to these power and number lives. The plural is hard. And we'll talk about it then. But don't let it stop you. Don't let it arrest, the things that you need to do and the decisions that you need to make in your business based on the information you have today. Same thing we talked about this with the tariffs, right? Like we're all kind of in this, wait and see mode. But again, we're going to have to make the best decisions with the information that we have at the time that we have it. That's all that we can do, right? Okay. So The other thing, just, on a general, purely, deadline basis, this is your quarterly 941, your Q2 941 is due July 31st. So don't forget about that. Again, if you are using something like Run Powered by ADP, then they're going to help you with all of that and make sure that you meet those deadlines for your 941s, generate those necessary tax reports. They're going to send you any reminders for things that need to be filed. And they just help you stay aligned with your federal due tax deadlines. So just make sure that you're working with a payroll company that you trust, and then you won't have to even remember all of these different deadlines, because y'all, there are so many different deadlines. No big tax deadlines going on right now other than that, though, so that's always good. Remember, if you extended your returns, if you extended a partnership return or an S Corp return, that's going to be due September 15th. And if you extended your corporate return, your C Corp return, I should say, or your personal return, that's going to be due October 15th. But don't wait till then, y'all. Summer is a great time to spend some time on taxes. Sounds super fun, right? Just with a pina colada in your hand doing your taxes. Highly recommend. Okay, and now we are on to the last section. Okay, and now we're taking questions. So again, we have a way to submit your questions. You can submit them live if you're watching on YouTube. Here's where you're going to submit these questions for next month's Power Numbers Live. And here you, for my newsletter, you can submit your questions here. And to be honest, we don't get tons. We get, we do get questions every month, but we don't get tons. So there's a good chance that if you ask a question, I will answer it. All right. So just, don't hold back. And I'll answer your questions. So I have a couple questions today on my profit and loss template. Actually, that's one of our more popular videos on YouTube, has been teaching people how to create a profit and loss. But then we also, if people don't want to go through the process of creating that themselves, we have a dashboard that they can create. So here's Gary's question I'm going to put up and answer questions about this. So he was asking if that template can also produce a balance sheet as well. And the answer is no. So to do a balance sheet, you have to have double entry accounting. And double entry accounting means debits and credits. I'm not going to get into all the specifics, and you may know this, Gary, but in order to do that, it really requires an accounting system that does debits and credits. So behind the scenes, you are accounting for both sides of the transaction. When you're doing the P&L, it's really only accounting for one side of the transaction, meaning, the income or the expense, but it doesn't necessarily track. We do have a way to track your cash balance, but it's not going to track your AR, your AP. It's not going to track your debt balances. It's not going to track your fixed assets that you're depreciating. So if you have any of those situations and need a balance sheet for that, or to track even your owner's equity, we do recommend using an accounting software. So that's kind of the delineation of, when it makes sense. If you need, for any reason, maybe you're an S Corp or a C Corp, so you're going to need a balance sheet, or you just need a balance sheet, or you're a partnership, and you need a balance sheet to track, each partner's equity in the business. I highly recommend using a software like Xero, FreshBooks, QuickBooks. I have lots of videos that you've seen. I think you mentioned that here in a minute about accounting software. So if you need a balance sheet, I recommend doing that. The P&L template is really more of a, if you're just getting started in business, if you don't have a very complex business, there's not a ton of transactions, because again, it's more manual of a process, but it gets you to where you need to be for taxes, right? If you're just a Schedule C and you just need a profit and loss to send your tax accountant, it's great for you. We do still provide it in Excel and Google Sheets. So if you buy it at jamietrull.com/profit loss. So here's where you can find kind of our accounting solution comparison if you want to go look and decide what's best for you. But if you go to jamietrull.com/profit loss, you can check out our profit and loss. And if you buy that, you're in the email, it's going to provide you both a way to get to the Excel and the Google Sheets version. I think actually you could open it. I think we have instructions on how to open it in Google Sheets. We made sure that they are, what's the word I'm looking for? congruent. I don't know. You know what I mean? Forgot my words. Words are hard. I'm going to think of it in a minute. But they do work well together. So you can open the Excel in Google Sheets just fine. So you can find out more about it there. If you have any issues, you can email Dear Danielle at support@balancedcfo.com and she can help you. But yes, and then the other question you had, let's see, any direction or help you can provide? Yep. Would be very helpful because you're trying to take control of your accountant versus hiring it out to others. Now, I'm not averse to hiring this out to others. I really am not. I think sometimes the more administrative tasks, it's totally fine to hire out to others so that you can focus on kind of the bigger picture tasks, but it's up to you. If you like doing this stuff and it's not too much work for you, then absolutely keep it in-house. Compatible. Thank you. Thank you, Sarah. Sarah's in my brain. She's my COO, so I know she's in my brain. Excel and Google Sheets are compatible. Thank you, guys. I need more coffee this morning, clearly. Okay, last question. Oh, no, there's 2 more questions. Just kidding. Okay, this question's from Belle, and this is also on the P&L template, so I wanted to take these together and answer these both today. Let's see. Val says, yes, so this is again on the P&L template. So the way our P&L template works is that you have to enter in, you can either download it from your credit card, right? And then you can copy paste into our template. Now, the problem is the sign sometimes. So different credit cards are different. And it's really interesting because credit cards and banks do this differently. What they show is positive and negative. So we tend to model it around banks because banks will show incoming as positive, outgoing as negative, but credit cards can sometimes be the opposite way. So you may have to switch the signs. It is annoying. You may have to go in and do it one by one. If you only have a few transactions, that's probably fine. However, if you have lots, what I recommend is just multiplying. If you can do this in your Google Sheet, right, or in your CSV file, just multiply each one and you can carry down that formula by -1. So if you multiply every single one of those by -1 and then copy it into the sheet, it's going to be a lot easier. So that would be my recommendation as kind of the workaround for the positives and negatives. Because yes, it is important that they go in the right way because you don't want to show an expense as income and then all of a sudden, you realize, you claim it wrong for taxes. So the signs are super important when we're talking about Excel and Google Sheets. Okay. All right, last question that I have is from Delby. Thanks for submitting. And this is on hiring your kids. So another topic that I have a lot of content on. What's a reasonable start pay for hiring your kids? What forms are required to submit for taxes? Is it best to hire an assistant to handle calls? I assume you mean your kid is an assistant to handle calls, and you absolutely can. It looks like you are a notary. So that's great. I love that. I love that as a business where you can hire your kids. So a reasonable, it depends, right? I always hate using that, but it depends what a reasonable rate is. How old are they, right? I have an 8-year-old and I have an 11-year-old, and they do different tasks for my business, and I pay them different things for those tasks. And I actually pay them differently based on the task. So you don't have to pick an hourly rate. It really depends on what you would pay someone else to do that work. So I pay my son. Oftentimes if he's doing formatting admin work for me on different things, I'll pay him like $15 an hour. Again, you can look and see what jobs are available out there. Or I pay him on a project basis sometimes too. So, how much would I pay somebody else to do this project, knowing like it's going to probably take my kid a little longer because they're learning. So I'll pay them sometimes project basis and say, hey, if you do this for me, you get $100. And I would probably equate that to what I would pay if I were to hire a virtual assistant or someone to do that work for me. So that's the main thing, is to think about, to get this done, what would I hire somebody else for? And then just document that. And again, you can pay them more if they're doing things like modeling and acting then, right? So my kids get paid a much higher rate when they show up on YouTube. My son once recorded an entire video, bonus lesson for my Hiring Your Kids toolkit. He did a whole bonus lesson teaching kids about money. He made these slides, he made the outline and all, came up with all the content, and he actually recorded the entire thing. And I paid him a lot for that because I would have to pay somebody a lot of money to do that. So modeling and acting tend to be paid at a higher rate. If they were going to go into a commercial somewhere, how much would they get paid? So you have to think about those, like for another small business, right? So you have to think about those types of things. So you can really look out there and see. I go to kidscasting.com. That's a good place to look if you're using modeling and acting rates, if you're trying to find those. That's where I look for what like the going rates are for things like that. And then what forms are required to submit for taxes. So you're going to want, I highly recommend when you hire your kids to do it just like you would any other employee. So that means you're going to have quarterly 941s, even if you're not withholding any taxes, quarterly 941s. You're going to want a W-2 at the end of the year. And it also depends on your entity type. So whatever entity type you are, for you, you're an LLC. So that means it's simpler to hire your kids for you. S Corps, there's more to it. There's more, things that you need to do. But it can be done in order to get the best tax benefits. So you're going to want to treat it very much like you would any other employee. That's going to be the most ironclad if you're ever audited, right? You can get audited by the IRS, you can get audited by the Department of Labor. So you can get audited by your state Department of Labor. You can get audited by your state income tax department. So the more you treat them just like you would anybody else, the better, which means filing all of those typically required forms for employment. And there may be things for your specific state, I don't know what state you're in, that are required as well. I walk through a lot of this in my Hiring Your Kids toolkit, but you can get a lot of information in the Hiring Your Kids masterclass. So my team will put that here. Definitely go check it out. It's free. So I go into a lot of information about it. And I talk a lot about the idea of a family management company. If you're an S Corp, how do you get the best benefits? So this goes through how to save the most money on taxes, but also set this up in a way that is totally legal, because we want that. Let's see. Oh, Andy. Thanks, Andy. An idea for a video. I'm just in the process of starting my company using Xero to track my future expenses. Yay. Hopefully you use my link. You get the best deal using my link, jamietroll.com/Xero. But I have a lot of past expenses before I start formally doing bookkeeping. Ooh, I like this. I like this as like, what do you do when you with those past expenses when you're moving into a bookkeeping platform. So I'm going to put that on my list for sure to make content about, because I think that's the hardest thing with moving into an accounting platform is just thinking through like those opening balances and how does that work and how do I make sure I'm capturing everything. And if you're moving from another system, that adds another layer of complication on top of it. I do have some videos on moving from like QuickBooks to Xero out on YouTube as well. But I like that of if you're just starting fresh on an accounting software, but you've got some expenses, how do you put them in there? And there are definitely some ways to make that happen. So I'm going to put that on my list. Thank you, Andy. I appreciate that. Okay, so I think that's all the questions that I have today. Again, I'm going to thank my fabulous sponsor, Run Powered by ADP, my payroll company that I use for all my payroll compliance requirements. So definitely go check them out if you're in the market for a new payroll provider. I do love switching. People get worried about switching payroll providers. Mid-year is a great time to switch, actually. The best time to switch is the beginning of the year, but there's a lot going on oftentimes at the beginning of the year. It is very possible to switch. I would do it at the end of a quarter. So like July 1, you could get up and running July 1 in a new payroll platform if you wanted to. So definitely go ahead and check that out. And you get 3 months free if you join with my link. Yay. All right. Thanks everybody for being here. And I will see you next month. Make sure to submit your questions for next month. And I hope y'all are having a fabulous summer. Bye for now.